So I did a class a while ago about trading a system and forming a system about 8 months ago. And in that class, we had a lot of you guys join in. And I think a lot of the ideas that I talked about need to be talked about again and with more context. So that's why I wanted to do today's session is to talk about trading a system, how to create a system, how to start, right? And even if you're a year in or 2 years in or 5 years in, you're going to learn something from this session, right? You're going to learn if you just started trading 5 minutes ago and this is the first Zoom session you've ever joined in, or you've been trading for 5 years, you'll get something from this information. Now, some of the things I'll say will be like a little controversial. Some people will disagree with me. Some people will agree with me. I'm just going to tell you guys what's worked for me, and tell you guys straight up, about a lot of different things. And there's going to be some things that are argument that you can argue about. And for me, there's no sense in arguing. I'm just going to tell you guys what's worked for me, and then we'll get into the arguments later. So that's my mindset. Um, so my personal background as a trader is I basically struggled for a long time. Um, it's just like everyone here, right? Just like everybody in this chat right now, I started off, we all struggled at some point. Many of you guys probably are successful, right? I'm sure there's a big component of you guys are already profitable. We're already, in this part of the P&L curve, right? You're in this part of the P&L curve. You're already there. But for the people that are here, right? I'm talking a lot to you guys, right? I'm talking to the people who are in that break-even stage, who are in that early stage, or even in the consolidation stage, right? And this is where I was for a long, long time. I was in that consolidation stage where I couldn't break out of that stage, and I was really stuck there for a long, long time. And even when I became profitable, it became profitable, right? What does that even mean? It just means that you're consistently making money on a monthly basis. For me, it wasn't just like, yes, I was, I 1 month I was making, I was down to 2K, and the second month I then became profitable with making 10K a month. No, it was not like that. For me, it was, I was down 2K, and then, the next month I made $200, right? And then after $200, I then made $500. And after $500, I made 10,000. And after 10,000, I made 20, then 30, then 35, then 40,000, right? It compounds in a way, but not in a way that you would think, right? There are some months, like for me in January of this year, I think just to be fully transparent, I had one of my smallest months I've had in over a year and a half, right? But that's how it is as a trader, right? You're going to have those ups and downs, and it's never going to be a very linear curve. It's never going to be like, yes, you're learning like this, then you consolidate, and then everything's just beautiful from there out. It's not going to be like that. It's going to be it's going to be more, you have your ebbs and flows of, okay, yes, you start off, you have a lucky day, and then you have a really bad week, and a really bad week, and a really bad month, and a really bad year, and then you consolidate and kind of figure out what you're doing wrong, and then you get into you get into the idea, okay, well, hold on a second, what I was doing before was wrong, and I know what I'm doing wrong, so I'm going to stop doing what I'm doing wrong and try to figure out what I'm doing right, and then capitalize on that and size up on those type of trades, and then you get this compounding result back the upside. You're going to find that for most traders, it's going to take you time, right? It's going to take you, probably at least several months to figure out what you're doing, and maybe even longer than that to really get into the swing of things. And even today, even for me, I've been trading since, I don't know, 2018, 2019. I still learn a lot, right? I'm still learning a lot every single day. I still come into the market and you learn something new. Um, so what I want to talk to you guys about today is three big things. I want to talk to you guys about, and even just keep this in mind, right? I want to make this very clear. Even if you're not struggling, even if you're already successful, us talking through this right now, it is still very positive. I know many of you guys have a really great day today, had a really great day last week. We had an incredible week last week, had an incredible month so far, maybe, right? It doesn't matter if you're year to date 500,000 or you're year to date negative 50K, right? It doesn't matter who you are. I'm just talking to you guys as a whole, about trading a system, how to actually sort of build the system properly. And again, one, that's the first thing. Second thing is trade plans, right? Coming up with trade plans, coming up with trade ideas, and then trading that idea. And then lastly, trading the right stocks, right? So you're going to see, I'll come up with some examples. Like, today I traded Tesla, had a really good time in Tesla. Yesterday I traded a name that I don't really usually trade, and it kind of bit me in the ass, right? So we're going to talk about that. We're going to talk about a lot of different things today. So Our first idea is I want you to talk about this is the biggest thing I see in the chat as a new trader is you got everyone strategy hops, right? So you guys think, not you guys, I shouldn't be talking to you guys like you're all problematic, but for the vast majority of you guys, right, you're gonna think that there's a holy grail strategy that you're missing. You're gonna think that there's something fundamentally missing in your system that is not allowing you to get a statistical edge, and you're gonna be wondering, what is it? Is it a Fibonacci retracement? Is it level two? Is it time and sales? Is it reading price action better? Is it managing my psychology better when I'm in trades? And you're gonna think, well, hold on a second. Well, what am I doing wrong? And the reality is that what you're doing wrong is you're trying too many things. You're running too many strategies that don't really make sense, right? You're going from a break and retest strategy to a fib strategy to trading a reversal strategy over VWAP or to then a 9 and 21 EMA cross. The problem is that many people, what they do is they start converging strategies and they're sitting there all jumbled up. It's like let's just say you have a math problem, right? You're in math class and you're given a difficult problem. And you know, all you need to do is find one way to solve that problem. You don't need 12 different ways to solve a problem. You just need one way to solve that problem. And the problem with people is that they think that there's something that they're fundamentally missing. So what they'll do is they'll go to YouTube and they'll say, well, I'm gonna learn a trading strategy. I'm gonna learn this strategy. And they'll go on their Instagram Reels and they'll see a strategy in Instagram Reels that's just so incredible and it has a 95% win rate. In reality, we all know it's BS. There's no such thing as a 95% win rate with just one strategy, right? There has to be something else there. So what do you do right? What are you supposed to do after this? Well, the key thing to do, in my opinion, is you need to learn the fundamentals. The fundamentals, this is no matter what strategy you run, you need to know the fundamentals. The fundamentals are the basics of charting key levels, right? That's the first thing you're going to do. Now, if you're sitting here in your chair or wherever you are, and you're like, okay, hold on a second. He's saying, learn how to chart key levels. So where do you go do that? Well, the best thing you can do is you can take your credit card and you can put it back in your pocket and you can go and not pay for anything. Just go literally to the class that we have for free in the Zoom recordings tab. We have two whole classes on charting key levels. We have a charting key levels and we also have a top-down analysis video, which shows you everything you need to know. Close the YouTube videos, close this, close that. Just go to those two videos, right? Learn those two things. Once you've learned those two things, in my opinion, you now know how to chart key levels. You're going to be adept at doing so. Now, granted, there may be some other strategies in defining key levels, which I may not be accustomed to, right? Maybe there are other traders you can learn from, or you can learn from millions of other traders. Maybe you can cherry pick from their ideas and YouTube videos as well. So I don't want to discount them, but I am saying there is all the resources you need to find key levels in the chat itself. Charting supply and demand, same thing. Now, the third thing is learning how to read price action. And in my opinion, right, there are three types of price action in which we talk about. You have your aggressive price action. Aggressive price action example would be Tesla this morning. So this morning when we traded Tesla, you can see the aggressiveness behind Tesla. Why is this considered aggressive price action? Well, look at the volume and look at the strength of the candles, right? Look how full bodied these candles are compared to SPY's chart at that exact moment. What was SPY doing today at 950 while Tesla was breaking out of its key breakout level, right? What was SPY doing? Well, SPY actually was dumping. Therefore, this is an aggressive stock. This is aggressive price action. Now, in comparison, right, let's look at a different name. Let's look at a name that was doing absolutely nothing today. Let's look at a name like Amazon, right? What was Amazon doing today? Amazon is a definition of a non-aggressive stock. Why is this a non-aggressive stock? Because it did not move today, right? You can see there's no aggression behind the candles. They're very much choppy, very much sideways. There was a little bit of, I would argue, there was a little bit of aggression in the morning, right? But that was short-lived. After that, we maintained choppy all day with no clear directional bias, right? No clear directional bias to the upside, no clear directional bias to the downside. This is an example of a choppy or non-aggressive price action, right? Now, the third type of price action is going to be your weak price action. So, for example, Unraveler took Microsoft, right? Which I think it's Microsoft, which is an example of aggressive downside price action. So aggressive upside price action, aggressive downside price action, and then you have your mild price action, which is nothing's happening, it's just chopping and consolidating. So you have three types of price action. Now, how do you learn how to actually read this? What do you do to learn this? Well, again, we have a video on that, but that video, truthfully, will not be enough. There is no one course, there is no one video, there is no one lecture that's going to tell you how to read price action appropriately. The reason why is because it just takes a lot of context clues and it takes a long time how to actually read price action properly. In my opinion, it probably will take you somewhere between 3 to 6 months to be able to be an adept price action trader, right? To be able to really read a breakout and say, well, you know what, this breakout is strong price action and I think it will go. Or to say, okay, this is a weak breakout. Maybe, for example, yesterday, for example, NVIDIA, no, NVIDIA was not a good example. What was the chart? It was a chart yesterday that we were watching. It was Meta. It was Meta yesterday. Okay, Meta, for example, right? Look at Meta. And where Meta actually broke out of that 530 level on Friday's session, right? On Friday's session, it broke out. Even on Monday's session, it technically broke out in the pre-market session. Now, how would you know that this is not something to take, right? Why would you know this is not something to take? Well, in reality, because of the price action, right? Because you can see there are sharp wick rejections off 530, right? It's not showing a build over 530 like Tesla was today over that 175. So the idea is that this is going to take you time to learn. The best way to learn how to do this is literally what you guys do on a daily basis, is watching other successful traders trade it, right? You guys will literally watch us live and say, well, you know what? I don't like Microsoft downside today because it's not showing me continuation, right? I don't like Tesla longs today because it wasn't giving us a big breakout, wasn't giving us a nice juicy breakout today, so I didn't take it, right? So obviously we took it today, but I'm saying the idea is that you want to use live trading not as just a mechanism to simply come sit and take trades, but you also want to use it as a mechanism to learn, right? Seeing, well, hold on a second. What are we doing? What is Unraveler doing? What is Felony doing? What is Mike doing? What am I doing that you can learn from, right? Because you're going to learn something from what we do. And if you can learn what we do, you can repurpose the trading strategy for yourself and implement it on your own and not have to be in the chat. Simple as that, right? Maybe you still want to be in the chat for whatever, for other reasons, but I'm saying the idea is you won't be reliant on us, which in my opinion should be everyone's end goal, right? Everyone's end goal should be ultimately to be self-reliant traders, right? Now, how do you do that? Well, you're going to have to do these several steps as well as sort of repurpose what we do. And you're going to find things that you don't like. You might find things that I do or Felony does or Raveler does or Mike does that you don't like. Maybe you find, for example, that you don't like using a 25% stop loss. You like using a 15% stop loss because you're a more conservative trader. You're going to have to cherry pick what you like, what you don't like, and then you can repurpose your own trading strategy as your own, right? And that's the idea here. And then you're going to structure an entire trading strategy around this. I really want to go back to this first concept here. Stop strategy hopping. There is nothing fundamentally that you need besides this. Now you can incorporate other things. You can incorporate EMAs. You can incorporate EMAs are great. Like for example, the 21 hourly EMA or maybe the 200 EMA in the 5 minute. Those are great indicators to use. You could use, like for example, I'll talk about in a minute. You could use a 5 EMA. The 5 EMA can really help you catch those beautiful trades that get the big percentage gains, right? You can use different EMAs to help you. You can also use Fibonacci retracements, right? That's another thing you can incorporate into your system, right? The using the 23.6 or the 38.2 with a 61.8 can be a very successful strategy. But you have to stop, you guys have to stop, right? Thinking that there's some holy grail strategy out there that is going to solve all your problems, because in reality, there is not. Because if there is one, you can trust me when I say this, right? There is nobody who doesn't take a loss in trading. You have to take a loss. You're going to realize that there's typically like a graph where I guess it would look something like this, right? Um, the higher your win rate is, right? So as your win rate increases, your average loss, your average losing trade, your minus P&L, right, is going to increase. So that's just a natural component of how things work. If I have a large win rate, a very high win rate, that's going to imply that I'm probably going to be taking a little bit of a larger loss when I do take my losses. And that's fine, right? That's going to be okay. And you're going to find your delicate balance. Maybe your delicate balance is something like this, where you have, an 80% win rate and your average loss is 20%, right? That's pretty good. But you may find that over here, if you have a 95% win rate, your average loss may be 60%, right? And you're going to see this yourself on your own journal, right? You're going to see where you are in your standing. For me, I'm somewhere around 80% and I have a 20% average loss, right? Everyone's going to be a little bit different. Mike may have a 90% win rate and a 30% average loss. Felony may have a 95% win rate and a 70% average loss, right? Obviously, I'm just making up numbers here, but the idea is that there is no holy grail strategy. And once you get that out of your mind and you just focus on the technicals, right? The learning how to chart key levels of supply and demand, learning how to read price action, learning the three types of price action, and then structure your trading strategy around this, you're going to be so much ahead of the curve where you're gonna just you'll be successful, right? In the long run, you will be successful. There is no special strategy. There is no special read in the market. Your indicators will help you, but it will not make or break your system or strategy. You will find that it will give you a statistical edge, but it's not going to make or break you. Experience is purely qualitative. This is what I was talking about. How do we know that yesterday's action was going to be choppy? What told us yesterday that SPY's action was going to be choppy? What sort of quantitative factor told us yesterday that it was going to be a choppy session? Well, in my opinion, there was no quantitative thing that told us it was going to be a choppy session. The only reason why we knew it was going to be a choppy session was because of experience, because we know that typically on days where we have CPI the next day or CPI that Wednesday, and days where we have a national event occurring, that it's going to result in a choppy market and a low volume move, right? These are the type of things that are qualitative. Everything I talked about here, right, can be learned. Everything I talked about here can be learned on YouTube, can be learned through a mentorship, can be learned through through what we have in the chat, through the immense amount of resources that we have in the chat for you guys in Honeydrip can be learned through this. The qualitative aspects simply cannot be taught. In my opinion, they simply cannot be taught. They have to be learned through just time in the market, through showing up and seeing price action, through coming to live trading and hearing, maybe Unraveler say, hey, you know what, that breakout sucks. Why does that breakout suck? Because he didn't like that 5-minute candle closure. Or hearing one of us say something that you wouldn't normally find, you wouldn't normally see just on a chart, but just because of our own sort of read of the market, right? This type of stuff is qualitative. It is acquired through just reading the market and getting price action and digesting it. So that's the idea here, right? Now I know this sounds very grim, right? And I don't want you guys to think this is grim, but the longer you trade, the better you will get. That is why trading is so good, because I'm a better trader than I was yesterday. I'm a better trader than I was last week. I'm a better trader than I was 2 years ago. And what does that mean? That means I'm going to make more money this year probably than I did last year. I'm going to make more money the next year, and I'm going to make more money probably the sixth or seventh year ahead of me, right? The idea is that it's scalable. This is a toolkit that is scalable. And the best part about it is you take your money that you get from day trading and you throw that in other investments. You throw it into long-term investing. Once you know how to do this type of stuff over here on the left-hand side, you will know how to come in and dip buy in the long term. You will know that right now, maybe Snowflake, SNOW, is a great long-term buy. You will know that. Why? Because you know the basics of charting supply and demand. And you will not only be a successful day trader, but you'll also be moving your funds over to your long-term investing and printing on the long-term side as well. I made 20% of my 25% of my profit last year was from long-term investing, right? Why is that? Because it's the easiest shit ever, right? It's the easiest stuff you can do. It's simply buy good stocks on dips and you make a lot of money doing it. It's super, super easy. So understand that the longer you trade, the better you will get and the more it compounds. And that is why we do what we do, right? I do what I do because I know that yes, I had a good year last year. Yes, I had a good month last month, but the next month will probably be even better. Why? Because I'm a better trader than I was last month. Um, so let's talk about some ideas here. Let's talk about some ideas. So refine your entries, right? This is what we talked about last session. This slide's exactly the same we talked about last session. So if you guys came to the last time we talked about this topic, You're probably going to be bored for about 5 minutes. So you can come back in 5 minutes. Just understand that I'm repeating this slide the same one I did last time. The reason why is because we have some new people in the chat. So you have to define your ideal setup, right? You're going to find that me, Mike, and Felony, Aristotle, we all trade very similarly. Unraveler trades a little bit differently. He trades a lot of VWAP reversals, a lot of tape-based trades. But Mike, Felony, and Aristotle, we all trade relatively the same. We all trade the break and retest or the bounce and reject. It's all we really do. Everything's really the same thing over and over and over again. Why do we do it? Because it gives us a statistical edge, right? I focus on a strong trending stock that is above, either the 15-minute 200 EMA and is uptrending. And then all I'm going to do is wait for it to break and hold the key level and look for a pullback and then look for longs for a new high, right? That's the whole idea, right? Or downside, same idea. I'll show you guys a chart in a second. Bounces and rejects are the same thing as break and retests. It's the same exact thing. There's nothing different here. We're just focusing on key levels that have not broken yet and key levels that have broken already. Same thing, nothing different here. Same exact thing. Intraday pullbacks, I'm not going to go over this. This is a different strategy. I don't even know why I put this here. I do it sometimes on my own, but I'm not going to go over that in today's session. No strategy will work 100% of the time. If you have a trader who says, I don't miss, or I'm the best trader, or I'm this or I'm that, they probably are not, right? They probably are not the best trader. They probably are not what they're saying they are. Why? Because no system works 100% of the time. And you're going to realize that the best traders are the most humble traders because they realize that the market can put them on their ass tomorrow, right? That's the way it works, right? That's the name of the game. You guys saw yesterday. You guys saw last week for me, right? Personally, right? Last week, I made about $20,000. On Monday, I came in and I got slapped, right? I got slapped right in the face. I got sucker punched. Why? Because I took Coinbase. I could have taken a much bigger loss on Coinbase. I took a bad trade. I messed up. Market humbled me, right? You have to understand that nothing's going to work 100% of the time. And when you position yourself with the idea that you're just you're testing ideas and you're sizing small in the trades that you don't have high confidence on, and you're sizing bigger in the trades that you have confidence on, you will be much more successful. Second thing is recognizing that reading price action and risk management are the reading price action and implementing proper risk management will be the biggest factors that differentiates a profitable trader from a developing trader. Case example today, Felony took Apple, made 30 or 40% on Apple. Great trade, beautiful trade. Hit it hard. It was in his game plan. He did well, caught some good money on it. He then took Snowflake and took a 15% loss or 14% loss. Now the chat was infuriated. I read the chat. They were like, wow, my day is ruined. I just took a 15% loss. My day is ruined, right? And I understand. Trust me, I understand. I've been there before. There are times where if I took one winning trade and one losing trade, I would be on my ass too. But the difference between a profitable trader and a developing trader is that a profitable trader is going to come in and they're going to hit the stock, right? That their main watch is Apple, which is a beta name, which we all know and love, with a little bit more size than a stock like Snowflake, which is a smaller cap name, which is a name that's more volatile and more risky, right? You're going to understand where to put your big money on and where to put your smaller money on. And that is why you want my honest answer as to why being someone who simply takes signals every single day will not work in the long run is because of that exact reason. Because you guys do not know which trades we were heavy on and which trades we were light on. Why? Because I don't know what size I'm going to be until I'm actually in the trade. That's the honest answer, right? I don't know if I'm going to be heavy on it or small on it because I don't know how this trade's setting up until it's actually real time. That is why you guys need to actually learn the stuff on your own. Yes, you can take trades from us. Yes, you will probably have 80% win rate, 85%, 90%, right? Depending on which avenue you're trading from. Yes, you will have a positive win rate, but you don't know where to be sizing up on and where to be sizing down on. Only we know that, and only we do that. Why? Because we've had time in the market. The idea is you guys have to learn how to do these things yourself, so that simply you don't have to be locked up to our win rate, right? You want to be doing this on your own without having to take signals because you don't know what size we're in, right? That's the idea here. The differentiating factor between a trader that takes the same two trades, but one is up $2,000 and one is down $500 is that one of the traders implemented proper risk management and knows how to position themselves properly, and the other does not. That's the difference between the two. How do you learn how to read price action? I don't know why I'm talking about this. I don't know why I'm jumping all around. I don't know what's going on with this presentation. I think we just did this. I think we just did this, but we're going back into it again. Let's go back into it again. Price action, I figure itself, and price action overall market. So again, market experience is what's going to teach you guys how to read price action. So today, for example, I use this as a really good example. In my opinion, this morning we were watching two stocks. We were watching Tesla, we were watching Amazon, we were watching SPY, we were watching Meta, right? We were watching a bunch of different names today. Why did we choose Tesla over other names? Well, truthfully, it's because we understood that there were 4 or 5 stocks that we liked because they were approaching key levels. Amazon was approaching key level 189. Tesla was approaching key level 175. Meta was approaching key level 530. How do you know which one to pick intraday? It's based upon price action, right? Compare Meta's chart to SPY's chart, and you're going to pretty much see here that SPY's chart is very much so matching Meta's chart. You can see they're very much identical, right? They're very much connected and identical here. There's no relative outperformance here. They're relatively the same price action. Now, let's take a step back for a second, and let's now compare Tesla's chart, right? Tesla's chart today to SPY's price action, just like we did earlier today, right? You can just see, even if you were to add just one indicator here, add a VWAP, right? The volume weighted average price, you see that almost all day, Tesla was above the volume weighted average price, above VWAP all day, while what was SPY doing all day? Under the VWAP all day, therefore it was weak pretty much all day. So why trade Tesla longs? Well, the reason why is because Tesla's strong. Tesla's an outperformer. Why would Rav trade Microsoft shorts today? Well, look at it. It's a relative underperformer. You can see, look at the downside it was pushing in. Well, honestly, also, this was rejecting off a key level. It was rejecting off that 428 key level. But the idea about Microsoft was that this was not only rejecting off a key supply at 428, but it also was relatively weak. You can see it was very weak compared to SPY, right? I mean, it almost was honestly pretty similar price action here, to be honest with you. But the idea is that it is at least a relatively underperforming or performing stock, right? Whereas Tesla, for example, is outperforming the stock. So why would you go long on Tesla and short on Microsoft? Well, the reason why is because you can compare it to SPY and you'll see, hold on a second, it's a relatively weak or relatively strong name. That's the idea here. Price action is not simply just based upon the stock itself, but it's based upon the overall market. It's going to be a condition of both of those things. Other idea about price action too. I mean, obviously, this is not a price action class. I'm not here to teach you guys price action in 20 minutes. I'm here just to talk about the ideas here. But you can also see that SPY, right? Look at today. Remember at one point today, I was on Voice, me and Felony were on Voice, and we just took a beautiful trade in Tesla. We were finishing up for the day, and then all of a sudden, SPY broke down. And I was done trading, but then I said, oh shit, look what SPY just did. Can you guys tell me, look at the volume coming in at SPY for a second. Can you guys see this 5-minute candle closure? Is this a weak closure or is this an indecisive closure? What do you guys think? Is it weak or indecisive? What do you guys think? Weak or indecisive? Weak, right? It's a weak or weak or strong, same thing here. I understand what you're saying. Strong, weak, yes. I would actually argue you're right. It's a strong equals weak for the downside. So that's fine. I agree, right? Why is it a strong or weak closure? It's strong or weak because look at it, right? You can see full body candle accompanied by high volume. That to me, under a key technical level, is telling me, hey, this is going down, right? This is going down. So what am I going to do in this scenario? Well, my strategy and system says, hey, hold on a second. Let's look for a pop short into. So I sat on Voice for a second and said, you know what? Let me just hang out with you guys for a little longer, right? Because maybe we'll catch this 518 short. Ended up happening where we never got that retest. We ended up pulling back down literally another $4, right? To 514, which was near our big demand. And all I did was I simply came in and said, well, you know what? I'm not going to sit here and watch price action all day, but what I will do is I will set an alert here at this candle low, at the breakout candle low. And if we pull back to 517.7, I'll go short, right? Why would I go short there? Well, because we just had a high volume and large aggression price action to the downside. And if we see a pop up over here, I'm going to look for shorts. Why? Because it is a critical level, right? It's a critical level. This is a break and retest. There's nothing opaque or or not transparent about what we look for, right? We just look for strong breakdowns, strong breakouts, and pullbacks. That's it. So I'm looking for that to happen. So what do? Right? Well, if you guys go to the chat, you're the high risk channel. We waited for it to pop back up into our level. And I want to ask you guys a question here for a second. I want you guys to look at the breakdown volume, compare the breakdown volume, and I want you to look at the volume to the upside as we're pushing up. What do you guys notice about the volume as we're pushing up into this critical supply? What do you guys notice? Compare the volume to the upside, compare it to the volume to the downside. The volume to the upside is considerably lower. That to me, saying, hey, go short. Stop loss is going to be 517.2, right? 517.2. I have proper risk reward. All I'm going to do is enter short anywhere in the zone between this candle low and my 518.2 zone. My stop is simply above that high. I'll take profit into key structure points, into 516.60, right? And into 516 and into 515, right? I'll take profit into these key structure points. Now, everything I just talked about here was price action, right? Was key levels and price action. Notice there was nothing crazy, nothing insane about what we just talked about. That's all it is. And the idea as a trader is for me, what I do, from what Mike does, from what Felony does, is all we're doing is we're just trading key levels and we're trading and price action. Have you guys ever wondered why is there overlap between the trades that me, Mike, and Felony trade in our style trade? Why is there overlap? It's because we trade the same freaking strategy, right? It's the same exact idea. Theoretically, we should all be trading almost the same things almost every single day. If you trade the same strategy, trade the same tickers or the same subset of tickers, you're probably going to end up trading the same stocks every single day, taking the same steps every single day. That's why, for example, we were in Tesla together today. We were in Coinbase yesterday. I was in Coinbase. Me and Felony were sat in Coinbase. Took a loss, obviously, but the idea is that you trade the same stuff. Nothing's opaque here. Okay. Why I'm showing charts here, I don't know. I'm going to skip this stuff. I'm skipping all this stuff. And I want to go to this last idea here. So this last idea I want to talk to you guys about is something that really made a difference to me in my trading. Guys, I see a lot of the questions. Trust me, I, uh, I, hold on a second. What's going on? There's something going on with the chat. Oh, there you go. Okay, it's back up. So, I want to talk to you guys about the trail stop technique. So with every trade that I take, with every trade that we take, we run a trail stop technique. So the idea here is you're gonna find what works for you. Now, for me, it's not always using the same trail stop technique every single time, but it does allow me to get bigger percent wins. So for example, when we took Tesla today over 175, we were all watching Tesla above 175. Above 175 was, if you go with the 1 hour time frame, it was that key level, right? You can see 175 has room back up to 178, has room back up into 180. Now, how do you know where to be taking profit in a stock like this? Can we come in and buy calls at 175 and say, hell freaking yeah, I'm going to hold everything to 178. Hell freaking yeah, I'm going to hold everything to 180 because I got, iron balls, right? No way to put it. Can you do that? Maybe you can do that, but the idea is you're going to have a much lower win rate than you would if you use something called the trail stop technique. So let's dive into what I mean by that. So let's just say, for example, I'm getting in calls here at 175. So we get the breakout of 175, we get that pull back to 175.5. We buy our first starters here. We intend to buy some more here. Okay, so we're in our position now. Now, where do you take your first profit? In my opinion, with every break and retest I take, anytime I see a big break above high of day, right? We're entering price exploration mode, right? We're entering price exploration mode. Technically, once we've formed a new high of day, we have no idea where it's going to reject. So we have to be scaling out a profit. So no matter what, if I'm up 5% or up 105%, I'm going to be scaling out a profit. So in this case, when Tesla broke above high of day, I was only up about 12%. So I took my first profit at 12%. If I come in with 20 contracts, I might take 5 or 10 contracts off, right? Why would I do that? Reason why is because all I'm going to do now is lock in some above high of day, right? Lock in some above high of day, and then engage the trail stop technique. The trail stop technique is very simple. The idea is you need to find a technical reason to hold something to get to that next level. That's the whole premise behind the trail stop technique. So for me, there are two sort of methods I use. I will use the 5 minute time frame oftentimes. And I will come in and say, well, you know what? If I just took my first sell here in this candle, 177.2, the next key level, in my opinion, the next key level here, let's actually go back here for a second. The next key level now, right, is 178. And I know that we're probably going to go to 178 because that's that next key level, right? We have the momentum, we have the strength behind us, but I want to be protective. So I'm going to hold my position, but now use a stop loss using that previous high of day. This is very important. I'm just using the candle 5 minute wick of that previous high of day. That's all I'm doing to engage my trail stop. Now, the other strategy is you can come in and say, well, you know what? I'm going to use the 5 EMA strategy or the 8 EMA strategy. For me, it's usually the 5 EMA strategy. So I will hold my trade as long as we're above the 5 EMA, and I will trail my runners to be held as long as we are above that 5 EMA. So if you were to implement that system here, you wouldn't sell until that candle right there, right? So you would hold your runners, your full size of runners, until you invalidate the 5 EMA at 177.6 and change, and you would full sell the rest of your contracts there. This would have allowed you to get a much bigger trade. Now, what I did in this case was I didn't use the 5 EMA strategy here, right? Even though I do, and I do run it very often, and I love using the 5 EMA strategy. I also will go to the 5 minute time frame and just run using the previous candle low or previous candle high. So I trim my stop here, I trim my stop here, I'll trim my stop here, right? That's the idea. There's nothing incredibly genius about what we do. We're just going to that 5 minute time frame and using previous 5 minute candle wicks as our trail stop. That's the idea. So, for example, why am I telling you this? Why is this important? Well, because if my average winning trade is 20% and my average losing trade is 20%, right? That's fine and dandy. That's okay, right? That's fine. But I want to get those big wins sometimes, right? I want to get those big wins. And how do you get those big wins? In my opinion, it's by using some sort of technical system to trail your runners. That's the idea. And I don't want to sit here and tell you guys that one system is better than the other, that the 5 EMA is better than 8 EMA, and the 8 EMA is better than the 13 EMA, and the candle high wick is better than any EMA strategy. I don't want to tell you guys what's what, right? I want to tell you guys that that's a system that you could use, and you can choose to implement whichever one you want to use for your system. For me, I use all three, right? You will catch me using the 8 EMA. You also will catch me using the 5 or the candle high technique. Okay, I'm losing my voice because I'm talking very fast. So what I want to do is I want to take a complete pause and I want to answer some questions. So I haven't looked at the chat in over 40 minutes. So if you guys have questions, you can type your questions in now, and I'll spend the next 5-10 minutes answering questions. So type it in, and we'll go over what we're gonna do. No, trust me, I don't need rest. I'm okay. I'm just I'm just talking very fast, so it's gonna cause some coughs. What are runners? Myron, so what are runners? If I come in with 20 contracts, right? Let's just say I buy 20 contracts here on Tesla, 20 contracts, and I sell 10 here. The runners are my unsold held contracts, which would be the 10 remainders. So I have 10 left. Those are my runners. So if I sell 5 here, I now only have 5 runners left. And the idea about any trail stop technique is you're using it to allow your runners to continue, right? Allowing your runners to run, right? That's the idea behind runners and what it means. How do you find a VWAP? VWAP is a volume weighted average price. It is an indicator on almost every platform or trade or charting platform. It is this indicator right over here. For break and retest, does the candle color matter? Yes, it does matter. If it's an upside break and retest, you want to see a green candle. If it's a downside breakdown, you want to see a red candle. How do we watch you live trade? We live trade every day in the chat. In the live trading tab, you'll see us live trading every day. The four of us live trade every day. Okay. Reading, reading everything I can here. Will you be able to sell all runners at once? Yeah, you can sell whatever you want, right? For me, if I have 20 contracts, I'm gonna come in and buy, I'm gonna come in and sell five at a time. So I'll sell five, I'll sell five, I'll sell five, and I'll sell five. But there may be times where, today, for example, I was a bit risk averse because I had a loss yesterday. I had a big loss yesterday. So I came in today risk averse. So I sold pretty heavy in my first sells, but then in my second and third sells, I was up 30 and 40%, right? So I was able to capture. I mean, look at this, for example, right? I took my first sell here at 12% and change, right? By my second sell, I was up 30, 40%. By my third sell, I was up close to 60%. So when I got stopped out on the rest of my contracts over here-ish, I was still up pretty nicely, but I would have never been up that amount if I didn't trail my stop, right? That's the idea. For beginners under 5K, what tickers do you recommend? Tim Williams, the ticker really doesn't matter. You're just gonna find what works for you and what you have time to read into. For me, I just choose the household names of Apple, Tesla, AMD, SPY, Amazon, Microsoft, Nvidia, right? The big 12, 13, 14 tech names, right? That's what I know. And the reason why I know it is because I trade it every day, so I stick to it. But you can always incorporate other tickers into your system, just trade a little bit lighter because it may trade funky. Uh, what's a good beginning strategy to use before beginning? Myron, I love you, man. And I know there's no such thing as a bad question, but that's a bad question. That's a bad question. Why is it a bad question? Because truthfully, there is no beginning strategy, right? You just have to learn, you just have to go through everything I just talked about, the idea of trading a break and retest, trading with supply and demand, trading key levels, right? There is no easy way to come in and say, yeah, I'm just going to come trade a strategy tomorrow and I'm going to be successful, right? Trading is not like trading is incredibly profitable. I would never be making this type of money right now in any other profession. There's not a single profession that will pay me this much. Very, very lucrative. But in order to make money, you have to put the time into it, right? So it's not going to be maybe OnlyFans or something. I don't know. There's something else you can do. I don't know if like an actor, maybe something you can do, right? There are sure all the things that are very profitable as well, but it's very difficult, right? And the chances of becoming a successful trader is much higher than me becoming a professional actor, right? So I guess the risk reward is pretty good there. Uh, okay. I talk really fast. Yeah, I talk really fast. I talk like a crackhead. Yes, I know. But that's just the name of the game. Okay, why do you use the 5 minute time frame and not the 2 minute time frame? Matthew, good question. Because it's what works for me. I know very successful traders that trade the 2 minute time frame. Case in point, Vincent Desiano, great trader. He's on YouTube. You can look him up. He uses the 2 minute. I use the 5 minute. Just works for me. But that's what I do. All right, we're getting a series of bad questions, a series of very bad questions. I'm going to avoid the bad questions because I'm going to start making fun of people. I'm going to really stop myself from making fun of people because I'm about to make fun of some people. God. Uh, okay. What year did you start trading? I started like back in 2018, 2019. How do you execute the Tesla trade of two contracts? Chris, good question. So I would trade the same way, right? I would still try to trail stop my trades. So I would still come in, right? I would still buy two contracts here. I would sell where I sold, right? And then I would 5 EMA the rest, or I would use candle wicks the rest, right? I would candle wick the rest and stop out on a candle like that. That's all I would do, right? That's all I would do simply on a trade like Tesla. I would trail stop it the same exact way. Unfortunately, you're not going to be able to get the same amount of trims, but you'll be fine. You'll totally be fine. And that's why I always say like it's better if let's just say you have a 5K account, right? And you want to scale into Tesla properly. Well, you can't come in with $400 contracts because you would have to get two or three or four or five contracts. So you're better going in with, $400 contracts or four 150 contracts, right? Why? Because you'll be able to trail out of your positions a bit better than you would if you had two very expensive contracts. So I hope you understand what I mean by that. I know it's a little confusing what I just said, but the idea is that it's easier to trail stop when you have more contracts. So picking cheaper contracts with a smaller count is usually the better idea because it will allow you to actually dive into and dive out of trades properly. Because that's what you notice with me, right? Why do I have such a hard time growing a small account? That's the answer, right? Because I have a hard time scaling in, scaling out. It would take me a very long time to grow a $1,000 account. Take me probably months, take me 2 months, 3 months probably to double that. Because for me, it would be very difficult, right? If I take safe sell to 10, 12% and I trail stop the rest, but I only have one contract, I can't trail stop the rest because I only have one contract. So that's why I would have a hard time growing a small account. And obviously, right, you can do it. It's very possible. You'd be great, but it's just gonna take you a little bit longer to do it. Yeah, exactly. That's why for me, right? I started off trading a $3,000 account. How did I get from 3 to 10, 10 to 20, 20 to 30, right? Well, it just takes a long time. It took me a much longer time to go from 3 to 10 than it did from 10 to 20. Okay. Do you chart and trade using TradingView? So TradingView is just a charting platform. So I just use that for charting. On the breaking retest, do you enter on the red candle pullback or wait for a confirmation candle? Alicia, great question. We always enter on that pullback. So when you see this candle, right? This is the breakout candle on Tesla. We're entering on this candle, right? Why? Because right now it's green, but at one point this was red. At one point this was a full body red candle, right? Printing down. So that's why we entered, right? Because it was a pullback to our 175 level. John, how to use Active Trader. In my opinion, there are better people who can show you how to use Active Trader than me. You go to YouTube and search Active Trader Thinkorswim options, and you'll find much better people than me to show you how to do an Active Trader. Actually, I have a video on Active Trader. I have video on Active Trader as well on YouTube, so you guys can check that out. It's on my YouTube channel. I use Thinkorswim. If you search Brett Trades on YouTube, John, you'll see my video. The most contracts I've ever traded was 120 contracts, I think. The most uh Ermias, yeah, I agree. But I do have one video on After Trader with Thinkorswim, and in my opinion, it's a very good video. Did you make a million trading? iPhone 2, I post my P&L on my Instagram page, so you can see my P&L for last year. But full disclosure, I did not make $1 million last year. Um, Still not sure how to use a stop loss in Robinhood. YouTube. Definitely go to YouTube for that for Robinhood because I don't know how to do that. All right, guys, this is where I'm going to call it. In my opinion, we covered a lot of really important topics, but we're getting a lot of questions that are very difficult for me to answer because it's like on things that truthfully I don't know how to answer, like Robinhood, I don't know how to use. But this was a very important lesson. This this is I want to tell you guys this too, right? This is important because a lot of times people don't take things seriously if things are free. And I think, in my opinion, this is one of those things. You won't take it seriously because this is free. But I will tell you this very honestly, there are people who will sell things and sell whole courses covering some of the same stuff we talked about today. Take what I said seriously. It will help you, learn from me, learn from Mike, learn from Unraveler, learn from Felony, learn from Aristotle, learn from Midas. We obviously I know you guys are paying. I know that, Tim. Obviously, right? I know that's true. But I'm saying this lesson that we're doing right now is something that people would usually charge mentorships for, right? This is obviously right. You're coming through a subscription-based platform in Discord. Understood. But the idea is that what we're doing right now, most people would charge you 3, 4, $500 to cover something as stupid as this session, right? Even though this was an important session, but they will do that. So take it seriously, go through the recording. I think it will help you guys. And learn from all of us as a team. We're an incredible team. And I'll catch you guys all tomorrow. This will be posted for you guys, so don't stress it. Luis, if you guys want the price action video, yes. I'm going to it's already in the chat, so you should have it. But if you can't find it, just shoot me a message on the stocks only tab and I'll help you out. So that's that, guys. I'll catch you guys all tomorrow. Let's absolutely kill it. And CPI tomorrow morning. So it's an exciting day. So catch you guys all in the morning. Bye, guys.